Okay. We have JLP and SLP, guys. Simple. Everyone knows what is joint life policy, where if three partners A, B, C together take premium for the firm, and if any one partner dies, firm will get the money. We'll come to SLP later. In JLP, we have three methods. Okay. First method is called premium, surrender value method, reserve method. How to identify which is what method? Very simple. In premium method, nothing will be there in the balance sheet. In surrender value method, I will have only JLP on the asset side. Let's take 10,000. In JLP reserve method, we will have JLP reserve liability 10,000 and JLP on asset side 10,000. Are you following? This is how you have to identify when you look at the question. So let me summarize. JLP three methods: premium method, surrender value and reserve method. Premium method is very simple. Nothing in my balance sheet. I am paying premium. In all the cases, let's say we get 1 lakh as my premium. Are you following, guys? Okay. Now, in this method, whom do you want to kill now this time? C only again. Let's say C dies. So in premium method, it's very simple. You are getting how much? Bank account debit 1 lakh to A, B and C. In what ratio? Profit sharing ratio. That's it. Same question again. Why are all the three partners taking money if one partner dies? It's called joint life policy. Correct? Are you following, guys? If husband and wife take an insurance policy, if when money comes, both will get the money. So if three partners take, if one partner dies, all three will get the money. This is first method, premium method. No confusion. Clear, everybody? Okay. Second method says surrender value method 10,000. So first when I get the money, I will write bank account debit. Always getting money, I will debit bank and I will credit JLP for 1 lakh. When I am crediting JLP for 1 lakh, JLP here is already having a debit balance of 10,000. So now JLP has a credit balance of 90,000. Correct? If I have to prepare the ledger of JLP, it started with 10,000 on debit side. Now I got 1 lakh money. So I am left with 90,000. This 90,000 I will share between the three partners in the profit sharing ratio. So what will be my entry for sharing here? JLP account debit 90,000 to A, B and C will be shared. In what ratio? Profit sharing ratio. Correct? Here I raised the question which most of you gave the answer. Sir, if I am getting 1 lakh money, why am I sharing with partners only 90,000? Why 10,000 is not given? Already 10,000 is given to partners. How? This 10,000 in the balance sheet was created by passing this entry. JLP account debit 10,000 to A, B and C in profit sharing ratio. That means in the surrender value method, I'll make a statement, tell me if it's correct. When JLP is taken, partners are given benefit twice. When JLP is created, they are getting benefit of 10,000. When partner dies, they are getting benefit of 90,000. Cumulatively, they are getting 1 lakh. Sir, how can I give the money to partner before getting the money? Because JLP has a surrender value of 10,000. What do you mean by surrender value? If you close the policy earlier before the death of the party, you will get minimum guaranteed money of 10,000. Is that clear? So second method, to summarize for exam, what is important? When second method, once you to create JLP at surrender value, this is my entry. JLP to ABC at surrender value 10,000 in ratio. When the money comes in, bank to JLP, net amount 90,000 shared between three partners. Is this clear? Everybody understanding, guys? In third method, in the balance sheet itself, I have here 10,000, here 10,000. This is reserve, this is asset. So when I get the JLP, my first entry will be JLP account debit 1 lakh to, bank account debit to JLP 1 lakh. This again becomes negative 90. Take this negative 90. JLP account debit 90,000 to A, B, C in profit sharing ratio. So asset side became 0. What is still left? Liability side. So I will pass again JLP reserve to ABC for how much? 10,000. In what ratio? Profit sharing ratio. This also becomes 0. Now the objective of JLP is to make the JLP in the books as 0. Now in this you might have a doubt. Sir, we received 1 lakh. You shared 90 and you shared 10,000. Then what about these two? These two were created before itself. They net off with each other. How you created this? When I created this, when I created the reserve, the entry would have been ABC capital account debit to JLP reserve, and when I created this asset of surrender value, the entry would have been JLP to ABC. That means this 10,000 and 10,000 on the liability asset side, when I created itself, it got knocked off. Are you following? Understanding how you going to show up, Purida? No, honestly. Okay. So in this method, the full 1 lakh is shared. So in this method, what is happening in the timeline? In the beginning of JLP, I created 10,000 for partners, and again from capital I took 10,000. I did two things. I created for 10,000 JLP asset and I transferred to reserves 10,000, 10,000. Again at the end of JLP, I am sharing 10,000 and 90. So they are getting 1 lakh. So ensure in all the three methods, partners get, it's about when they are getting this. Are you following? This is a JLP. Clear? Next is SLP. First time we are seeing now, single life policy. I am using the same example what's there in the book, 8.145. Let's take three partners A, B, C. I'll tell the logic and the method. SLP means they are all going to take single life policy. Each of them are going to take separate policies, but the policy will be paid by firm. So here there is 1 lakh, 2 lakhs and 3 lakh. This is the policy amount, and surrender value given is 10,000, 20,000 and 30,000, and the profit sharing ratio they gave is 3:1:1. This is how most sums also come. Okay. What do you mean by single life policy? Separately they have taken this policy, and in this question also C died. Okay, C died. So what happens when C dies? When one partner dies, entire policy comes to an end. When one partner dies, all the three policies come to an end. So here when all the three policies come to an end, from A, how much money you will get? See, all the policies won't come to an end, but C is, so here I will get how much? 10,000 surrendered. Here I will get 20,000. Here I will get 3 lakhs. Because C died, only the party who died, the policy amount will be received. For others, I will take only surrender value. Are you following? Because if you close earlier, okay. Why am I closing it earlier? Because one partner died. So if one partner dies, my profit sharing ratio will change. So this surrender value belongs to everybody. Look at this. In this case, once C died, this 3 lakhs belongs to everybody, and this 10 and 20 belongs to everybody in the ratio of 3:1:1. Policy of A and B can continue. It will continue in the future, but in the new ratio between A and B. So what is the total gain here? 10, 20 and 3 lakhs. How much has come to? 3 lakh 30,000. This will be shared in the ratio 3:1 into 1 by 5. So C will get 66,000. Correct? Are you following, guys? Guys, are you understanding? So if single life policy comes, whichever partner is dying, take that partner's, what to say, policy amount and the other partner's surrender value, share between the partners in profit sharing ratio. Why am I doing this? Because this amount should be settled to the person who died, their legal heirs. What will A and B get? Nothing. For them, policy will continue, but they will get, in this share they will get. So they will not get that, they will get 3 lakhs money into that 3 by 5 and 3 lakhs into 1 by 5. That surrender value money they will get. Okay. Even though it's single life policy, each individual, the firm partners, they will share it. Are you following, guys? Clear? Now, this is fine. This money, who will take it? The respective partners will take it. Are you following? Correct? That's what is given. Hello? This is SLP. There is much in-depth logic over here, but above JLP I told the logic. SLP, to the extent possible, logic is conveyed. But for me now, this discussion is for exam. In exam, if JLP and SLP comes, what is the treatment? This is the treatment. That's it. Are you following, guys? That's about JLP, SLP. Try a sum. We'll again discuss one more big sum if you have tomorrow. That's it with JLP and SLP. Thank you, guys.